Welcome back. You're still watching Editors Roundtable on CNBC-TV18. We're going to talk about the big event upon us, which is the Reliance AGM that happens on Monday. Now, here are a couple of things that you can watch out for from the AGM. Some updates on the business, of course, and the partnership announcements that the company has made. But the IPO timelines will be keenly awaited. Now, remember, Reliance in the 2019 AGM said that they will list the telco and the retail business within 5 years. Now, with 4 years already behind us, the investors, stakeholders, and the industry is keenly awaiting whether any kind of timelines will be announced in this AGM. Now, BofA Securities released a note where they said that the AGM is generally not a forum for the company to announce timelines, but given that they just did that deal with QIA, perhaps for Reliance Retail as well as for the Jio business, some indications could come through. Any potential value unlocking announcement may help deleveraging. So that's the big thing to watch out for. Apart from that, on the telecom business, a couple of things that we're looking out for. One is any updates on the 5G rollout and the Jio Air Fiber. Any updates around the recently launched Jio Bharat phone, as well as they may focus on some partnerships with Netflix on prepaid bundle packs, etc. So that's for the telecom business. For the retail business, of course, we are awaiting more details on QIA, the investments that QIA has made in Reliance Retail, and any indication of the IPO as well. On the energy business, any update on the investment in clean energy? The company is also looking to set up gigafactories in both solar and the battery business. So that will be keenly awaited. But if you look at the stock, right, the stock has been one of the big underperformers. In fact, this week and month, the stock has already lost about 5 to 7%. So Ajay, I want to toss this question to you. As a Reliance shareholder, what is the most important thing that you would watch out for? And is there anything in the AGM that can be a trigger for the stock?
I think if you're a Reliance shareholder, I would say sell your stock and buy something else, because it has not only underperformed in the last 1 month, it's underperformed for the whole year. If you look at the whole year, I think it's roughly about 10%, which includes the geo-financial price of today's market. In a market which has done such wonders to the major stocks, you are sitting on a 10% stock. That's one. Number two is, we need to understand that Reliance core business retail is an 8% EBITDA business. It's among the lowest profitable business. Yes, you can be a Walmart, but Walmart doesn't fly or give superior returns to the market. It used to be called a widow's stock at one point of time for the dividend yield it comes. Reliance is building up a retail, is raising equity, but a lot of debt is sitting on the balance sheet at this point of time. So whatever Reliance does at the end of the day, there are lots of debt which it borrows and continues to borrow at this point of time. So there is huge capex requirement. And with an 8% or 9% EBITDA business, the valuation can't go very far anywhere in the world, except India at least apart. So I would say the thesis that you can build scale, you can build volume, build the biggest company, but for a shareholder, the returns would be very marginal because your core businesses, which is retail, is at 8% margin. Your petroleum used to be at 28% EBITDA margin, and you are borrowing heavily to build the business. I think both of them are a recipe that investor returns will not be anything greater than, or must be much lower than the market. So to my mind, this is one stock which let the institutions own it. There's no point retail owning it. Yeah, I know we love it from the past. Reliance has to be owned by everybody. It's the greatest thing, but not the best place to put your money given what's happening in the rest of the market.
Ajay, I want your thoughts on the NBFC space next, because I happened to host a panel discussion in which we had the top 5 NBFCs. And one of the NBFCs, Piramal Finance's Managing Director, Jairam Sridharan, actually came out and said that, the next credit event or the credit cycle is actually just months away, not years away, months away. And that came as a surprise. I mean, not just to me, but others on the panel as well. And by the way, Piramal has exposure to the unsecured segment. He was, to be sure, talking about the unsecured segment. Let's just actually play out that soundbite. And Ajay, let's just ask you for your views after that.
I think we've all got to imagine that whether we can see it coming or not, a credit cycle is coming, right? And now which part of the segment it might come from.
How many years out, you think? I mean, best guess.
You use the wrong word there. I would say months. You look at the data. What do we see right now at the industry level? We see secured lending products, risk continuing to come down across the full industry level. You see personal loans products, risk was coming down for a long time and now it has stabilized. And you see credit cards, it was coming down, it stabilized, and now it has started going up. So credit cards has gone up. Within personal loans, which look stable, if you split it up into small ticket and large ticket personal loans, small ticket personal loans risk has already gone up compared to 6 months ago. So credit cards and small ticket personal loans risk is already up. MFI just went through a cycle 2 years ago, so they're not going to see any problems for a little while. But the semi-urban, urban markets, unsecured lending, is risk going to be remain where it is today, 6 months from now? I would bet serious money against it.
Okay, with that, we have completely run out of time on this edition of Editors Roundtable. Ajay, thanks a lot for joining in. Have a great weekend. And to everyone here, to everyone watching, have a great weekend as well. We'll be back bright and early on Monday morning.